It's a somber morning of the headlines that you can see on your screen when it comes to trade as well and markets. You're watching Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar, and with me is Hormus Fatakia. And Hormus, once again, it's an across-the-board weakness that we're staring at. The Nifty is now just about at that 24,000 mark, a shade below it. Border tensions continue to keep the prices deep in the red. The Sensex is down close to about 800 points. The Nifty is down 260 points. Mid-caps are selling off. The small-cap index is down close to about 2%. Look at that advanced decline ratio. We have one stock advancing for 6 in the red. And I think barring the defense index, where the index is up close to about 2.25%, the last time I checked, with individual names like BEL, BDL across the board, rising on expectation that defense production will increase given the regional flare-up. But other than that, you have weakness in most of the key sectors. A handful of stocks are actually in the green right now. You've got a Titan, L&T, Tata Motors, Britannia, where there is news flow. But other than that, banks are weak. Look at the losers list: Power Grid, Trend, Ultratech Cement, NTPC, ICICI Bank, Shriram Finance. So it's cutting across sectors. And today, the global picture is far more upbeat, where, I think the narrative is that there is going to be tariff de-escalation with the US-UK treaty and a lot of optimism going into the weekend with US-China trade talks.
Indeed. To read between the lines for the US-UK deal, there are a lot of unanswered questions within that as well, and that's also keeping the Dow futures currently at the flat line.
Actually, UK closed in the red, so they weren't excited.
Exactly. Yeah. And it's not necessarily a positive for a lot of these automakers as well, because the tariff still stays. It's not as if there have been zero tariffs. It's just some concessions here and there. But yes, it has been some moves coming in on the global picture as well. But for now, the Nifty currently around about the 24,000 mark is where the index stands at. But as Prashant has also been highlighting all through the day, there are no significant volumes on the downside is what we've been focusing on. 260 points down on the index, yes. But of course, even in the broader markets as well, the market breadth in the earlier part of the day was around about one stock advancing for every 10 declining. That has now slightly improved to one stock advancing for every 6 that are declining. So 400 stocks advancing currently on the NSE. And of course, it's not as if there are no stocks that are bucking the trend here. There are plenty of positive earnings reactions as well. You can have L&T as a case in point. You can have Titan as a case in point. Bharat Forge too doing well for itself. Of course, that you can give that a defense spin to it. But L&T 3% higher. Titan too trading with gains of around 3.5%. So positive earnings reactions coming in for a lot of these sector leaders in today's trade. And of course, in the broader markets too, barring the defense names, Union Bank of India is up 5.5% after its results. The slippages were elevated marginally on a sequential basis, but the write-offs have seen a significant decline compared to the December quarter. So at the highest point of the day is Union Bank of India. KPR Mills is now up 23% in the last 3 trading sessions. Ever since that UK FTA was signed, that stock has been going from strength to strength, and today it's reporting results as well. So keep an eye out on KPR Mills. But shifting focus back to the big story that has been on for the last 2 to 3 days, tensions between India and Pakistan continue to simmer. We have Parikshit now joining in with the latest set of developments. Parikshit.
Well, yes, India continues to monitor the situation very closely. Operation Sindoor is not over. We used our cutting-edge air defense systems to bring down drones and missiles from Pakistan. There has been all our air bases are active. No major collateral damage. We will get an assessment in the next few hours. But all those drones and missiles from Pakistan were effectively engaged. Yes, the air bases along the border continue to remain shut because airports can be a priority, high target for the Pakistani forces. But airports around the country continue to function normally as well. Now, all of this happened between 8:30 and 12:30 last night. And the Army, Air Force and the Navy continue to be on very high alert. Very heavy shelling also taking place intermittently at the border in places such as Rajouri, Poonch. So let's see how things move on. It's unlikely that things may de-escalate very soon, but India has sent out a word to the international community that our intention was never to escalate things. Our Operation Sindoor was aimed only at terror camps in Pakistan. And Pakistan is the original escalator because they are the ones who perpetrated the Pahalgam attack. And it's incumbent now on Pakistan to dial down tensions and punish those who are responsible.
Indeed, Parikshit, thanks a lot for sharing that update. In fact, let us get you a ground update as well, where our colleague Ishan Vani is joining in with the latest. Ishan.
Well, yes, there is a bit of panic in Uri, and last night has witnessed a massive shelling that has taken place. Let me take you to the visuals if we can go a little big on the frame. This is the destroyed structure in Uri. What remains is ashes, everything burned, and only you can see that there are, fumes coming out and smoke is coming out and blowing out of this particular location. What we have been given to understand is that a mortar shell landed here, and Pakistan is some distance away from this location. And from here, what we have been given to understand is that shells landed here, people ran in panic, and this is the scene of destruction and gives you an idea of the things have been. There's an earth mover here. You will see its glasses have also been shattered, and whatever came in its way, it just destroyed it. This tells you about the ground situation. There are splinters all around this place. You will notice on the other side of this road, if my VJ Bashir Lone can zoom in and show you that shop there, it has all the splinters that from a artillery shell, which has gone inside these shops and almost shattered it. Imagine if there was any person lying around, he would have instantly been killed. And thankfully, in this particular incident, no one was harmed. And a lot of population from this area is now leaving Uri. What we have seen while coming and driving through, we were here yesterday as well, and we hadn't seen so much of movement taking up place of people out. But now there are people who are leaving Uri, considering it's unsafe, and during the night time there was massive shelling that took place. Look, it was yesterday when massive artillery shelling came in after they sent in swarm drones to attack the Indian establishment, particularly the security and defense establishment, which are crucial for the defense forces in Kashmir and Jammu and even in Punjab and other borders as well. But now the escalation has gone far beyond, because it is involving now not only the line of control but also the international border, which has further deepened the tensions between the two countries. While there are several countries asking India and Pakistan to exercise restraint, but on the ground the situation remains tense and grim. While the drones were successfully, according to the statement issued by the Indian Army, that they were successfully diffused, and India's S-400 system was able to tackle down every drone that was trying to hit at the Indian security system, but they have been foiled. But the scenes here are grim. It reminds of how deadly a conflict can be and how deadly a war can be. But now, it has claimed life of a lady. She was traveling in a car, a rented car, when a splinter from top of a mountain on top came, and then it hit the car and resulted in her instant death.
Ishan, thank you so much for that update live from Uri in Jammu and Kashmir. Ishan Vani there of CNN News 18. And since we have this opportunity to tell our viewers that we are only carrying verified information. There are also a series of fact checks that we have done on CNBC-TV18. You could catch them on our website and on our digital platforms as well. Take a short break here on a Trading Hour. On the other side, we'll be joined by United Breweries' Vivek Gupta to discuss their fourth quarter performance and the road ahead for the company. Stay tuned. Welcome back to Corporate Conversations. Then United Breweries reported their fourth quarter numbers that were higher than expectations. The profit increased by 20%. Revenues also grew 9%. We've been now joined by Vivek Gupta, who's the MD and CEO of the company. Vivek, thank you for joining in. If you could talk about how the first quarter is shaping up. That's the peak season for you, right? While there are tailwinds from Telangana, there is a surprise tax cut. There is a tax surprise in Karnataka.
Right now you all know we are in a very volatile situation. So first of all, our heart goes to everyone who is in the border towns and, for the safety of everyone. I would say we are off to a good start this year. Our last quarter, we ended up with 5% volume growth and 9% revenue growth. The summer has kicked in. We have invested ahead of time to ensure that we meet the peak capacities. You're absolutely right. the demand is actually in a tale of two cities. In certain states, the demand is really outpacing the supplies we can provide, but in other states, because of the high excise duties and recent taxation moves, we are seeing a slowdown in the demand. But we are really monitoring the situation. On Karnataka, as you met, there has been frequent excise hikes. In fact, after the last duty change, the beer category is down 12%. This is a state where 3 years in a row, the beer category was growing double-digit. We are actively meeting the authorities and sharing the data with them and continuously asking to make sure the sustainability of the beer industry and affordability remains as a part of their key plan. So yeah, it's volatile in state like Karnataka, depending on the excise duties. But having said that, overall, we still feel good about the momentum we are seeing in this summers.
Okay, feeling good about the momentum seen in summer. So, Mr. Gupta, what kind of growth are you seeing or anticipating in terms of volumes or revenues? Any numbers so far, say, for the month of April, and particularly for the premium products? Are you seeing higher growth? Is there any number that you could put to that?
Absolutely. I think, as you know, for us, premiumization is a key strategy. For the last full fiscal year, we grew 34% in our premium business, premium volumes. We continue to maintain that momentum. We have made significant investment in local production of our premium brands like Ultra Max. We've also expanded Heineken Silver and Amstel Grande in many states. So we continue to see an explosive growth on premium, and we continue to grow shares in that market to do that. As well as revenue growth is concerned, we just declared our first quarter results. As you know, the pre-season's build-up starts in March. As you see, despite the disruption in two major states, Karnataka due to the label changes in January and Telangana due to the suspension we have in January, despite that, we ended up the quarter with a 9% revenue growth. So we hope that momentum to build in, but as you mentioned, as you see today, we are in a very volatile situation due to the geopolitical environment. We just need to see how that impact the production facilities, the continuity, the movement of transportation. So that is an unknown, which is very recent, which we will have to take into account as we go for this quarter.
What about margins, Vivek? You've taken a price hike from Telangana, but you've also made some investments in new brands and bottles. So where do the margins go from here?
We continuously plan to gradually increase our margins, as we said. But having said that, our first priority is to grow the category. We want to be category makers, not category taker. We have seen that in the last 1 year, we were able to grow the category by around 6 to 7%. This used to be a 4 to 5% number before we actually went into this strategy. So I think our priority is going to be invest in category growth. You're absolutely right. We are doubling number of coolers, which we are putting in the stores. We are investing in our capacity expansion. We're investing in the organization. We are also investing in a lot of new bottles, especially in the premiumization. When we launch new brands or when we expand new segments, it needs a lot more new bottle than a recycled bottle to start with. So all of that has an impact on margin. At the same time, commodities are volatile. The tariff situation globally and some of these our local context will have an impact on the commodities. So there are a lot of plus and minuses. So, but our goal is to continuously increase top line, but also sequentially increase margins, which we have also done because in the last year itself, we have increased our margins by almost 40 basis points. So that trend will continue.
You spoke about Karnataka and how it's been impacted due to the frequent excise hikes. What about Uttar Pradesh and Maharashtra? With the new distribution there, what is the opportunity that you are targeting and seeing?
Actually doing a lot of design to win initiatives. As you know, in Alcobev, the markets have different archetypes. Distributor market, wholesale market, corporation markets. We are actually reviewing our go-to-market program in each of the market and make sure that the customers get the best service. So in UP, there has been an expansion in stores and there is also expansion in our service program for the stores. So we are seeing a strong double-digit growth in UP. In Maharashtra, we redesigned our distribution network. We are now much closer to the customer in the service and we are seeing a growth. So we expect this program to roll out in another 5 states this year, and we expand it nationally over the next couple of years so that we can provide the best service to the retailers. And this will really help us to expand category, get beer more dominant space in the store, and also consumer will get the cold beer.
What has been the increase in the bottle returns for your existing brands, Vivek?
Absolutely. In fact, a couple of quarters back, we talked about we are putting a lot of operating discipline. Thanks to all our partners, we have seen a 300 basis point improvement in our return bottles. But as I mentioned to you, our premium business is growing more than 30%. So we are putting a lot more new bottles in the system. But overall, we have seen a 300 basis point improvement in our return bottle collection. And we think there's more opportunity so that we can get back to closer to the pre-COVID level.
So, Mr. Gupta, just to summarize this interview, as we wrap it up, a double-digit revenue growth and say a 40 to 50 basis points margin improvement likely for FY26?
That those are our goals. We would like to have double-digit revenue growth in India and volume growth. But as I mentioned to you, there are a lot of new information volatility. But we definitely want to grow ahead of category, grow shares. But more importantly, we are looking for category growth at 6 to 7% as well.
Indeed, Vivek, thanks a lot for spending time and joining us today. Wish you good luck there for FY26. The management there of United Breweries continuing to believe that the premium segment continues to do well and have had a good start to the new financial year as well. The stock off the lows of the day at the flat line. Take a short break, continue our coverage on the India and Pakistan tensions on the other side. Stay tuned.
Welcome back. We continue our coverage on Operation Sindoor, and the latest that we're picking up is that the government has issued urgent directions to the telecom companies amidst India-Pakistan tensions. Ashmit Kumar is now joining in on the latest that he's picking up from his sources. Ashmit?
Well, what sources tell us is that the government has conveyed in very clear terms to the telecom companies that with the evolving security situation that we have on the border, the growing tensions between the two neighbors, it is critical to maintain seamless communication, especially with respect to national security. Importantly, this message has gone through to the telcos. They've acknowledged it. They've expressed their willingness, their readiness for dealing with this emergency, and have expressed their agreement. So what are the telcos agreeing to? What are they expressing their willingness for? What are these directions? Well, to begin with, the telcos have been asked to maintain a list of critical telecom infrastructure, especially the ones along the border. There is also a direction that has gone to the telcos to ensure that there is continuity, uninterrupted service, especially by these towers that are within a 100-kilometer radius of the international border. Not just that, another request that has gone is that in case there are specialized communication requests that come from the Ministry of Defense, that is something that the telcos, it is hoped that the telcos will provide. From a logistical standpoint, another direction that has gone is to ensure that there is sufficient fuel available at the tower stations, at these transceiver stations. There's sufficient power sources available, a DG set if required, to ensure that there is uninterrupted communication, to also strategically deploy teams, repair and maintenance teams, to ensure that if in case there's a tower site or a BTS site that is struck, then there is sufficient men available to in fact bring that system back online, bring that tower back online. There are also in fact tests being done as far as intra-circle roaming is concerned. For the benefit of our viewers, what this effectively does, that if I am working, if I as a customer have a telecom operator A, then in case the network of telecom operator A is impacted, I could then switch to telecom B provider, telecom C provider under the intra-circle roaming mechanism. And importantly, telcos have also been asked to share real-time data with respect to their infrastructure in terms of their network availability with the government. So clearly a whole host of measures that the government is doing, that the telcos are doing, that the telcos are partnering with the government on to ensure a stable, uninterrupted, seamless connectivity, especially from a national security standpoint.
Important information there, Ashmit. Thanks a lot for that update. And we all are in a sensitive situation, and it is of utmost importance that we only bring to you verified news. And several videos and pictures are being circulated on social media which are either fake or are related to other past incidents. Now, the fact check unit of the Press Information Bureau has clarified on these claims on social media. Sandhya is joining in with more on this, and Sandhya has been on top of this through the morning. Sandhya, tell us more. What's the latest?
So, Harmaz, more fake, old or unrelated videos and pictures are making rounds on social media. So, let me start with the most significant one, the most sensitive one. We already reported this in the morning. The fake claim is that entry to India across airports has been banned. Indian government has fact-checked this. Indian government has clarified and said that government has taken no such action or no such decision. Second fake claim is, again, a significant and a sensitive one, and we can understand the motive here. The fake claim is, and a viral WhatsApp message is circulating. The claim is that ATMs in India will be closed for next 2 to 3 days. We know the motive here, why this message related to ATM is being circulated. So Indian government has fact-checked this also, and Indian government has clarified that no such thing is going to happen. ATMs will continue to operate as usual. Another fake claim is that, and this is being done with the help of an old image, and old image is being circulated with false claims of multiple explosions at Jammu Air Force Base in India. We all know why Jammu is of extreme importance, especially right now, and that's why we know why this fake claim is being circulated. The truth is, once again, an old image is being used, and we all remember what happened in Afghanistan in 2021. So that's where the image is from. The image is from Kabul airport blast in August 2021. Next fake claim is that a drone, again, an old video, an unrelated video is being used for this particular claim as well. A drone strike video is being circulated on social media claiming that, a drone strike video from Jalandhar is being circulated on social media, claiming that Pakistani army has shot our drone down. The fact is that this one is an unrelated video of a farm fire, an old video, and that too of a farm fire. Now, when you look at the timestamp of this particular video, Horvaz, it's of 7:39 p.m. yesterday, and we all know that the response by Indian forces started much later than this timestamp. So we all know that this fake is absolutely fake. Next one is strikes on Amritsar military base camp by Pakistan. Again, totally the claim here is fake, and the video which is being circulated is old and unrelated. Next one, and this one came this morning, Hormaz, that Hazira port in Gujarat has been attacked and destroyed by Pakistan. We're talking about a port, and once again, we know why, whether it's our ATM, whether it's related to our airports, whether it's related to our ports, why these fake claims are being circulated. The fact here is that video claiming that Pakistan has attacked and destroyed Hazira port in Gujarat, that video is actually of 7th July 2021, and it's of an oil tanker explosion. Now, next one is, and this particular claim was all over social media last night, and in fact, many verified Twitter handles also ended up reposting this. This shows that how important it is to stick to official information, that is, Fidaian attack on an army brigade in Rajouri, Jammu and Kashmir. No such thing happened. In fact, no army camp anywhere in India was attacked. Government knew this was going to happen, so government has requested the citizens to only rely on official information, and we at CNBC-TV18, we understand our responsibility. So our coverage is absolutely responsible. We are sticking to facts. There is absolutely no noise, and with utmost responsibility, we are bringing facts and only facts. Hormaz.
Thank you very much for that.
No, it as to reiterate what Sandhya was saying, right, that this is an important, in a situation like this, we need to stick to facts and to appeal to our citizens as well to not fall prey to any of this
fake news. There are a lot of baseless, visuals, news that's going around, and it's just causing panic also. So,
and the list that Sandhya listed out, right, is a long,
it's a growing list of,
shows the kind of misinformation that is being circulated. And we continue to reiterate here that at CNBC TV18, we will only and only be reporting verified information, and we continue to do so on our website, on our social media handles, and on our television programming as well. We'll take a short break. Up next, we discuss some technicals with Mitesh Thakkar and some trading ideas as well. Stay tuned. Welcome back and continue to our coverage of the markets and on the latest developing situation as well. The Nifty continues to remain around that mark of 24,000, a cut of around 200 points on the index. The broader markets too seeing some recovery from the lows. The Nifty now at 24,100, so there is some recovery from the lows of the day. The broader markets too have seen a very smart recovery from the lows. The mid-cap index is now up almost 600 points from the lows of the day, so just 0.4% lower now for the mid-cap index, and the small-cap index too is seeing some recovery from the lows of the day. There are plenty of earnings reactions. There are earnings that are to be reported today as well. Dr. Reddy's will come out with numbers anytime now, so we have to keep an eye out on that. Apologies. Also, the small cap index too almost up 200 points from the lows of the day. Dr. Reddy's has slipped into the green as we speak ahead of its results, and also keep an eye out for Yes Bank in today's trading session. That too is trading with gains of around 7% as we speak, closing at the highs of the day. Mitesh Thakkar now joins in with a quick chart check. Mitesh, resilient so far has been our market. The dip that came in the morning has now been bought into, seeing some recovery from the lows. Would you stay away from the index for now and focus on specific stocks? So first, your call on the index and your trading ideas as well.
So, on the index, I've maintained that we still need a consolidation. The good thing is that today, with the negative gap opening, we didn't, see any kind of follow through. In fact, the open is the low, and 24,023,850 is my lower pivots. I think that range should hold. And on the upside, it will be difficult for the Nifty to get past 24,500, 520. So broadly, it's a range market, which is a sideways market, and therefore, I think the idea is that try to buy closer to 24,000 or maybe levels below that, slowly accumulate and keep a stop below 23,850, and try to take profits as we reach levels close to about 24,450, 500 zones.
Mitesh, what about individual stocks? Any trades that you would recommend?
So on the stock side, I've seen a fresh breakout happening on the charts of Yes Bank disclaimer. I've bought a very minor quantity today because I'm not sure of the fundamental perspective over here, but the chart looks very interesting. So buy here with the stop below 19 rupees, look for a target of around 21 over the next few days. And the other one which is on my radar is LNT. LNT has given a price and volume breakout post at numbers, and while there's a weekly pivot around those levels of 3490, 3500, I'm looking at a target in excess of around 3575, 3600. So I think that's the target area to begin with. Buy here with the stop just below levels of 3,400 and look for targets in excess of 35.75 to about 36.
Okay, got that. Thank you very much for that. By the way, auto is leading the recovery. So in the frontline pack, it's not just Tata Motors now. Pull up a Hero MotoCorp. That's up nearly about 2.5%. M&M has managed to get back into the green. So M&M is higher by nearly 0.5% from the day's low. It's a recovery of close to about 3%. And Tata Motors continues to be the pick of the week with a 7.5-8% rally. Sudarshan is now joining in with the latest news. And Sudarshan, this US-UK trade deal, we were talking about it yesterday that Tata Motors could be a beneficiary considering so much of JLR exports going to the US. What came out and how much of an impact can it really have on the stock?
So yesterday we saw that both the governments, US and UK, have unveiled a broad outline of the trade agreement, while the final details are expected in coming weeks. As Trump has said that right now we are deciding on the agreement, but all the details will be out in next few weeks. So why this is positive for JLR once it's signed? So US government has decided a blanket 10% tariff on all the imports, but as far as automobiles is concerned, so for JLR, US market is the biggest export market. In 2024, total exports that JLR had done of 1.04 lakh vehicles. Now, US government has announced that up to imports of 1 lakh vehicles, there would be a tariff of 10%. So it's going to be positive for JLR because the maximum exports that it had done in 2024 was 1.04. So it would be entitled for 10% tariff. But we have to understand that before this 25% tariff was announced by US government, tariff on passenger vehicles was 2.5%. So it's an increase from 2.5% to 10%, but there was 25% tariff that US government had announced. Now it's final that tariff will be 10% as far as JLR is concerned. Now, why this is positive for Tata Motors? Because JLR contributes 70% to Tata Motors' consolidated revenue. So now this is going to help JLR maintain its targeted range of EBIT margin. Also, outlook is going to improve going forward. But one thing that we have to understand that we'll have to wait for the final agreement to be signed. And once it's signed, then we'll get to know what exactly the tariff. But as of now, 10% tariff that's going to be implemented on JLR vehicles.
Positive signs there for Tata Motors continuing from where it left off earlier in the week as well. So multiple positive triggers actually for Tata Motors. But of course, as Sudarshan was mentioning, there will be some rise in costs for the JLR vehicles as well. By the way, Amphi numbers flashing on your screen. The small cap fund inflow almost constant compared to last month. The large cap fund inflow has seen a marginal increase from the month of March, and it'll be interesting to see what is the equity inflow that has come in overall for the month of April. That will be the interesting number to track because, mind you, that number had declined slightly in the month of March. So it'll be interesting to see if that has seen a bit of a rebound in the month of April. We'll continue with our coverage of the Amphi data. We take a short break and we'll be right back.
Welcome back. Amphi April data is up for you on your screen. The number that we're watching closely will be the total equity inflows in the month of April, and it's come in at 24,253. That's a marginal decline compared to what we had in the prior month. But what is important to note is the declining trend in the equity inflows. Now, just to put it in context, in the month of December last year, December 2024, the overall equity inflows were in excess of 41,000 crore. In January, it was 39,700. In February, it was 29,241. In March, it was 25,000. And now, again, in the month of April, we've seen a further decline, a slight moderation in the overall equity inflows. From 25,000, we're down to 24,253. And April was the month where markets had actually bounced back. At least January, February, March, there was so much volatility. But in April, we had seen the market snap back. It's only towards the last week of April, after the Pahalgam attacks, that markets started consolidating while the rest of the global markets were rallying and catching up. But on the whole, April was a positive month. But despite that, we've seen the overall equity inflows moderate. The mid-cap funds, 3,313 versus 3,400. So again, a smidge lower. Overall, you could also call it stable because it's hardly a decline. But it's just that despite the recovery in the markets on the whole, the overall equity inflows continue to remain muted. The AUM has swelled. 70 lakh crore is the overall AUM now with mutual funds.
Fourth straight month of decline as well in terms of equity inflows, and also down to the lowest level in a year. Let's get an official reaction from this as well. DP Singh, the Deputy Managing Director and Joint CEO at SBI Mutual Fund, is joining in. Mr. Singh, good morning. Thank you for joining in. What do you make of this? Would you be slightly concerned with the decline in the net equity inflow? Of course, it's not a very alarming fall when you compare that to the size, but what's your first take on the numbers?
No, not really, Lam. These are numbers are on the expected lines. Actually, there was a bit of confusion, and in the month of April, generally, there are something because there are always heightened activities during the month of March But the numbers are not at all. I mean, 24,253 and 25,017 is hardly any difference. The actual number on the SIP side also, I'm very sure will be on the similar lines. But we are not at all concerned. And say month of consolidation, though initially market bounced back, but there was Pangam attack, and the markets are a little consolidating. But I think it's absolutely fine. If you look at the overall number, 5 lakh crores, almost 4.5 lakh crores of AUM going up. All those outflows which were there because of the year-end blues are back into the market. So that's something to be.
Indeed. I think the SIP contribution, the number is not out, but it's been rock steady now through all the volatility. Retail investors have held their faith. They've been very resilient. And, we're still awaiting that number. It comes out in the AMFI call. But SIP numbers have been very, very steady. Also, Mr. Singh, I think in the month of April, the number of sectoral funds or the NFO launches were also few because there was still a lot of uncertainty in the market. Is that perhaps one of the reasons why we've seen this slight moderation or no growth? And another question, is there a typical seasonality associated with April start of the new financial year?
No, that's what I said earlier, because there's always heightened activity at the year end. People have to achieve their target. There's a lot of sales push, marketing push, but there is always generally some slowdown in the month of April. And naturally, there was no NFO, not only the sectoral funds, but otherwise also there were no NFOs per se in the month of April. NFOs generally bring in new set of investors. So because there was no NFOs, so naturally there was not much activity on that. But see, $3 billion, if you put in dollar terms, of net inflow by a retail investor is a huge number. I think we should be very happy about that. Forget about the month-on-month this time. A 3 billion number is very good.
Indeed. Mr. Singh, stay on. We are also being joined by Akhil Chaturvedi, who is the Chief Business Officer and Executive Director at Motilal Oswal AMC. Akhil, good morning. Thank you for joining in. We spoke about the large cap funds that have seen a slight increase in inflows compared to last month. But the ETF number, I just saw the ETF number is at 19,000 crores compared to 10,000 crores last month. So it's almost double compared to last month. What would you attribute that to? Is this investor shifting focus more towards the ETF side of things instead of relying on specific / thematic funds?
So I think the ETF number would largely be dominated by the institution buying. So I'm assuming, I've not seen the numbers, but I'm assuming that the ETF flows would be largely in the Nifty 50. And if that is the case, then that would be more to do with the institutional EPFO flows. Because typically the retail investors tend to participate more through the mutual funds.
Okay, unfortunately, gentlemen, we're out of time. But I think the liquid fund, we should also check. There has been a sharp inflow in the month of April versus a big outflow in the prior month. But gentlemen, thank you very much for joining in. We'll touch base with you, still awaiting the SIP numbers. But April data for the month of, by the mutual funds has been a slight moderation on a month-on-month basis. April equity inflows have come in at 24,200 crore, which compares with 25,000 crore in the month of March. And it's the fourth consecutive month of decline seen on a month-on-month basis in terms of equity inflows. Get into a break. As promised, on the other side, we'll get chatting with Root Mobile. They reported their numbers 2 days back. Gautam Badalia joins us next. Welcome back. Root Mobile is down 3.5% today. It's down 35% since the start of the year. And the last 1 year has been difficult. Root Mobile stock price is 53% off from its 52-week high. Gautam Badalia, the CEO of the company, is now joining in with his view on the upcoming year. Gautam, thank you very much for joining in. This is Rima here. Has Q4 panned out in line with your expectations? I remember the January conversation, or the early February, you had indicated or you had hoped that Q4 will be better than Q3. But that's not played out. Q4 is similar to Q3. So was it worse than your expectations? And where did the miss come, if at all?
Yeah, good morning everyone, and thanks for having me here. So if you look at, I think the overall performance for the year, I think we have done well. I'll say, in terms of demonstrating industry-leading growth rate, as you rightly said, Q4 was at par with Q3 in terms of the revenue run rate. What actually transpired was one large global technology client. Actually, they phased out one of their platform, and then they also started moving the authentication and notification messaging over different communication channels. So that was a little bit of a headwind for the quarter. But for that, I think overall from a revenue standpoint, I think we have done well. Regional businesses, I think they have done and shaped up well in terms of demonstrating growth. We have grown, the volumes by 15% on an annual basis. I think the pain has largely been around the hyperscalers and also around some of the aggregator business. So some of that, I think, because of trust deficit issues around artificially inflated traffic and all. There are some structural changes happening, and that's where I think we are now investing into the next cutting edge technology, working on telco APIs, where we can do direct authentication at the direct network level. And then by virtue of being part of a large group within Proximus, I think we are able to now score on credibility with some of these large hyperscalers. And I think in due course, I think you will see some amount of, this pain recede meaningfully, and it should then translate into decent growth, from some of these hyperscalers.
So Gautam, very simply, at a higher level, if you could explain what exactly is the problem with the hyperscalers? How much does it contribute to the traffic right now? What is the concern? Why are they slowing down work? At a very simple base level, for people who don't understand the technicalities of your business, if you could explain.
Sure. So what actually had transpired over the last 1.5 to 2 years has been, operators have been raising international tariffs for termination of the messages, right? And a lot of CPaaS players have been committing to the telcos, most of these hyperscalers have been looking at kind of cost optimization within their scheme of communication spend. So eventually what has transpired is some of the commitments kind of became over commitments, and then there were artificially generated traffic, which really caused a lot of concerns with some of the large players like the Amazons, Metas, and Microsofts of the world. And they started kind of introspecting into their communication spend, and they were paying for some of these fake traffic, so to say, which was not yielding them any ROI. So that led to a larger introspection. They started evaluating alternate mechanisms for sending those communication. And that was essentially the headwind that I'm talking about. And now I think most large global enterprise prefer working with partners who are directly connected to the telcos and not working with partners, where there are multiple hops.
Okay. And the concern of artificially inflated traffic, where did the buck stop? Who was responsible for that?
As I said, I think that's where I think the technology evolution will play a pivotal role. And as a part of the Proximus global umbrella, we're already kind of embarking on that or investing into that futuristic technology. The telco API, network API solution. And then I think with 365 Squared, the company that we have, they've already developed an AI-powered spam filtering solution, which is deployed with a few telcos. So we are already kind of investing into some of the stuff which can give a lot of assurance to large global enterprises, hyperscalers, in terms of their communication spend.
When you say that many large global enterprises prefer to directly work with partners, were they trying to bypass CPaaS players like you and some of the others?
The CPaaS players, but there were a lot of CPaaS players who did not have direct connectivity with the telcos. We, as part of the group, we are directly connected with 450 plus mobile network operators. So we definitely have an edge. Now we are not trying to invest all of the ante in terms of the technology evolution and drive that volume through us directly.
Okay. Now let's get back to the numbers. Do you think a 15% revenue growth is possible in FY26?
So as I think highlighted, earlier as well, I think we're not looking at giving any guidance considering, what's kind of transpiring globally, in terms of the tariffs, in terms of geopolitical situations. So we are not very sure about how the discretionary spend within all the enterprises kind of will evolve. But I think what we can assure to all our stakeholders is that we'll continue to demonstrate industry-leading growth rate. And at this point in time, I think what is within our control is to kind of also work on some of the cost levers. So, over the last year, because we closed a very large M&A transaction, by being part of the larger group. There were a lot of integration costs, a lot of one-time incentives, and some compensation realignments. So some of those things are, in the past, we are now looking at some of the cost levers, automating some of the internal processes through AI. As a management team, I think we are committed to also drive some cost optimization during the year and thereby drive some stronger profitability.
So gross margins, which declined in Q4 to 19.3%, can get back to 21% by the end of next year?
Again, I will not want to kind of commit on anything forward-looking, but as you rightly said, I think what we have been able to tap into with the group in terms of synergies have been the low-cost synergy bucket, which was essentially the lowest hanging fruit. We have picked out pretty much on that, in terms of tapping that out in terms of the full potential. Now we are looking at tapping into the higher margin synergies, I think, with the group. So we believe, I think we are pretty much at the bottom of that gross margin profile, and the margin profile should meaningfully improve going forward.
Okay, we'll take that as a guidance then. Gautam, thank you very much for joining in. So the gross margin perhaps has bottomed out and will meaningfully improve from here on as the company looks to improve their cost efficiencies and tap into the synergies with the Proximus Group. Route Mobile stock down 3.6%, markets down 1%, but the Nifty is holding on to 24,000 mark, even as border tensions continue to remain high and weighs on the market sentiment. It's a wrap on Trading Hour. Don't go anywhere. Halftime report is up next.